Hello, my name is Achim Amann of Black Label Properties. I'm the director of the company. We are here based in Berlin, Germany. The topic of today's video is the risk, especially for people who are not based in Germany, who are not used to investing here in Germany, who maybe have never invested here in Germany before. We are making sure that you're having no risk, or at least as little risk as possible. So we usually say we're having 6 different risks. So the first risk is, of course, the interest risk. The second risk is the price risk. The third one is the inflation risk. The fourth one is the regulation risk. The fifth one is the product risk, so the kind of property you're buying. And the sixth one is the tenancy risk, that the tenancy isn't paying the rent. I would like to start with the interest risks. So the first interest risk is considerably low. We can help you because we usually have a fixed mortgage rate here in Germany for minimum 5 years. Most of our clients are going for 10, 15 or even 20 years mortgage, especially when you buy and want to hold the property for a long period of time. So a fixed interest rate means that you don't have to pay back the mortgage for different interest rates within that period of time. So that's something we can easily cover for you. The second one is the price risk. So a lot of people are asking us if we're having a price bubble and all these things. So when you come back to the realistic chance of having a price bubble, we usually have 4 different criteria on the price risk, and especially on the bubble. The first one is we're having more supply than demand, which is not the case in all major cities here in Germany. One of the main reasons is that the construction industry is not really fast enough to produce more apartments, especially in the big cities. It's similar to all the other big cities in the world, so I don't think we're going to have an oversupply in the major cities here in Germany. The second risk, that the interest might rise and that the prices then will fall. This is very unlikely, especially during the corona pandemic and especially after the corona pandemic. The likelihood that the interest rate will go up is very low. We have the tenancy risks. That means that people aren't preferring to buy anymore, they prefer to rent. Again, here, especially in Berlin, we're having so many regulations in the rental market. I don't think that there are many people who prefer to rent because there's simply no apartment you can rent for a low price anymore. And then, of course, we have the fourth risk, which is a migration risk, especially during the corona pandemic. You might have seen that there will be less people migrating here to Germany. But if you compare it to other European countries and nations, you can see that Germany has stayed quite stable, especially with the amount of people still moving to Germany. So all the big cities have stayed fairly stable and have lost very little people. So we don't really have a price bubble here. So that's the price risk. And of course, our job is to make sure that you're paying a fair market price for you as an investor. We're also having stable price increases. This is another topic. The next risk, the third risk, is the inflation risk. And based on the inflation, of course, you can see the inflation is going up. To invest in property is a very positive thing because usually property is covered by inflation. We then have the product risk. So what kind of property you're buying. Here in Germany, it's a very high quality standard of construction. So even you buy an existing apartment, we usually send a structured survey or surveyor in. We make sure if you're buying off-plan property, everything is covered with different surveys. We're going through a legal process, which is very, very strong. So that's also a very minor risk. We then have the regulation risk, which is a big one. The regulation, I'm sure you have read all the news about the rent ceiling, about the rent cover, about many, many things. The tenants are very protected, which is, by the idea of it is very, very good because it should make sure that the tenants don't have to leave the apartment. However, there might be more regulations down the way. One of them is that they want to stop that you can cut bigger units, so bigger block of apartments into smaller blocks and then sell the apartments one by one to protect the tenants. That's the story behind it. It's actually not true, the idea, but the intention is from left-wing politicians very, very strong, and we believe that's going to happen. Again, this will mean also less supply to the property market. So regulation is a big one, and we should talk to our lawyers if you want to invest, how we can protect you on the regulation risk. The last risk is the tenancy risk, so that the tenants aren't paying the rent, which is very, very unlikely, especially if you have a low rent and if you don't expect high yields. So in the residential section or sector, that's where we operate, the likelihood that the rents are not coming in or the tenants aren't paying is very, very low. I mean, you have seen that during the corona pandemic, all the tenants usually have paid the rent, especially if they don't have a different apartment to move on. So that's a very low risk. So in total, we're having 6 different risks which we can protect you, or at least can make sure that you're having as little chance that one of these risks going to happen, and if so, that you are protected as much as possible. If you have further questions, please watch our YouTube channel. We're here to help you, or contact us directly on blacklabelproperties.com. Thank you for watching.